Can you please elaborate a little more about mortgage credit impact? Okay. Could I talk about mortgage? Yeah, absolutely. So generally what happens with mortgages is FICO wants to see a mortgage on your credit report. In fact, they want to see 5 things on your credit. 3 credit cards, 1 installment loan, like a car loan or student loan, doesn't matter, 1 installment loan, and a mortgage. You can have 800 plus credit scores without a mortgage and without a car loan, but you cannot have 800 plus credit score without 3 credit cards. So you need 3 credit cards, you need a car loan, and you need a mortgage to have the maximum amount of points. So when you go out and get a mortgage, generally speaking, you will see a 25 to 50 point increase in your credit score within a month of that mortgage showing up. So, or I should say within a month of you closing, because the moment it shows up on your credit report and someone pulls your credit, you're going to see an increase on your credit score because of the mortgage. Now, why is that? Well, what is FICO trying to do? What is the credit score? Your credit score is the likelihood of you paying your bills on time over the next 2 years. That is all your credit score is. What is the likelihood of Marco paying his bills on time for the next 2 years? Now, let me ask you, do you think that someone with a mortgage is more financially secure than someone who rents? FICO, over the last 60 years, has determined that someone with a mortgage is less likely to miss a payment than someone who's a renter. Now, is it factual? No, they're just more likely to make their payments on time because they have the ability to have a mortgage. So you can't go get a mortgage without a job or income. You can have an 850 credit score and you can have money in the bank, but if you have no way to pay that mortgage back via a job or some type of income, you're not going to get the mortgage unless it's a reverse mortgage. Whereas you can have a 550 credit score and income and get the mortgage. And so FICO knows this. And so FICO is saying, hey, if you have a mortgage, we're going to give you preference and increase your credit score because there's likelihood that you're going to pay your bills on time. Now, when you get the mortgage, because FICO looks at it as you could be a veteran, it could be FHA, it could be ag, they don't really care what the balance owed on the mortgage is because it's a 30-year mortgage and they know most people are going to move every 5 to 7 years. So very few people actually ever pay off their mortgage. So that's why they don't really ding you on points for not having a lot of equity in your home because they don't really care. They know you're going to move every 5 to 7 years. So they don't really care. So hopefully that answers your question on that, Marco. Thank you.